Welcome to your personalized deep dive into FXUSD.
Oh, cool.
Yeah, we've got a whole stack of articles and research that you sent over,
Awesome.
all about this new stablecoin that's launching from the FX protocol.
Right.
Now you might be thinking, another stablecoin.
Yeah. What's so special about this one?
Exactly, and that's a fair question.
For sure.
But trust me, this one has got some seriously intriguing features.
I'm excited.
Yeah, to get started, maybe you can help me understand something.
Okay, shoot.
I know FX already has some really interesting products out there,
Uh-huh.
like F,
Right.
which, from what I gather, lets you kind of fine-tune how much ETH volatility you're exposed to.
Exactly.
And its price performance has been pretty impressive.
Oh, yeah. It's done really well.
Yeah, but what's got everyone buzzing about FXUSD is its unique mechanism.
Yeah.
It doesn't rely on those traditional liquidity pools.
Okay.
Instead, it taps directly into the ones that are already established for liquid staking derivatives. What's the
Okay.
advantage of that?
Well, that's a great question, and it gets right to the heart of why FXUSD is causing such a stir.
Okay.
By leveraging existing liquidity, FXUSD could potentially sidestep a lot of the challenges that brand new stablecoins face.
Okay.
You see, most stablecoins struggle to build deep liquid markets,
Yeah.
which can lead to higher trading costs and volatile prices.
Makes sense.
But FXUSD is designed to avoid all that
Okay.
by integrating directly with the massive liquidity pools that are already out there
Right.
for tokens like STIF and FXETH.
Oh, so it's like piggybacking on the success of these already popular assets.
Exactly. That's a great way to put it.
Hmm.
And this could have some major implications.
Like what?
Well, for starters, it could mean lower slippage for users,
Okay.
making trading FXUSD a smoother and less expensive experience.
That makes sense.
Plus, it could make the protocol itself more efficient and cost-effective.
Okay.
So instead of having to incentivize liquidity providers with token emissions,
Right.
FXFTS can focus resources on developing new features and expanding the FXUSD ecosystem.
That's a really interesting point. It's like they've found a way to bootstrap liquidity without the usual headaches.
Yeah, exactly.
Okay, so before we dive into the nuts and bolts of how this all works,
Sure.
let's back up a bit.
Okay.
For anyone totally unfamiliar with the FX protocol,
Mm-hmm.
can you give us a super quick overview of what they're all about?
Certainly. At its core, FX is all about creating token pairs.
Okay.
One stable, one volatile,
Hmm.
that are linked to an underlying asset.
Gotcha.
Let's take ETH as an example.
Okay.
You got FETH,
Right.
which tracks only 10% of ETH's price movements.
Okay.
And then you have XETH,
Uh-huh.
which absorbs the remaining 90%.
Interesting.
This gives users the choice.
Hmm.
Do you want stable staking rewards with FETH
Okay.
or more leveraged exposure to ETH's price with XETH?
Oh, so it's like they've split ETH into two distinct parts,
Exactly.
each catering to a different type of investor.
Precisely. And what's so fascinating about FXUSD is that it takes this splitting mechanism to the extreme.
Okay, I'm hooked. Tell me more about this extreme split.
All right.
How does it work with FXUSD?
So imagine taking ETH and literally splitting it into two parts.
Okay.
One part representing $1 of value
Mm-hmm.
goes into FXUSD, which is designed to remain stable.
Okay.
The remaining value, the part that fluctuates, goes into the volatile counterpart.
Mm-hmm.
Let's call it XETH for now.
So unlike traditional stablecoins that rely on algorithms or reserves to maintain their peg,
Yeah.
FXUSD is intrinsically linked to the price of ETH, but with the stable portion always remaining at that $1 mark.
Exactly. It's a fundamentally different approach to creating a stablecoin.
Hmm.
And it opens up some very interesting possibilities,
Okay.
especially when you consider the potential yield opportunities.
Okay, let's talk yield.
Yeah.
Everyone wants to know, where does the FXUSD yield come from and how high can it go?
Well, there are a few layers to this, which is what makes it so intriguing.
Okay.
The base layer is the inherent ETH staking yield from the underlying liquid staking derivatives, protocols like Lido and Frax.
Yeah.
You're essentially tapping into the rewards generated by those protocols just by holding FXUSD.
So that's your starting point.
Yes,
But it sounds like there's more to this yield story.
there is. And this is where things get really interesting.
Okay.
Remember how those X token holders, the ones who opted for the volatile side,
Mm-hmm.
are primarily focused on price fluctuations?
Right.
Well, they essentially give up their ETH staking yield.
Okay.
And that relinquished yield flows back to the FXUSD stakers,
Interesting.
potentially boosting the overall yield by a significant margin,
Like how much?
maybe even 50% to 80%.
Wait, so by holding I'm essentially benefiting from the yield given up by those who are more interested in ETH's price swings.
Precisely. It's a clever mechanism that incentivizes different types of investors to participate in the ecosystem.
That's pretty neat.
But that's not all.
Well, there's more.
Liquid staking derivative protocols themselves can further incentivize specific FXUSD rebalancing pools with their own governance tokens.
Gotcha.
This adds yet another layer of potential yield on top of everything else.
So we've got the base ETH staking yield,
Yes.
the yield multiplier from the X token holders, and then this extra boost from the liquid staking protocols themselves.
Exactly.
It's like a triple whammy of yield potential.
It is.
What kind of actual numbers are we talking about here?
Well, it's tough to give precise figures.
Sure.
Because there are so many factors at play.
Of course.
But even conservative estimates suggest a range of 7% to 15% APY. Of course, this will depend on market conditions.
Yeah.
And the specific strategies employed by the liquid staking protocols.
That's a pretty impressive return for a stable asset.
It is.
It definitely makes you think about how FXUSD could fit into a diversified portfolio.
Yeah, for sure.
Now, I have to ask about something else that caught my eye in these articles.
Okay.
It seems FXUSD doesn't need to bootstrap new liquidity pools like most stablecoins do.
Right.
How does that work? It sounds almost like magic.
It's not magic, but it is pretty ingenious.
Okay.
When you mint FXUSD, you're essentially tapping into the deep liquidity already present in the underlying liquid staking derivative pools on a platform called Curve Finance.
Okay.
These pools are massive and already handle a huge volume of trades.
Gotcha.
So FXUSD can benefit from that existing liquidity right out of the gate.
Oh. So instead of starting from scratch, FXUSD is leveraging the existing infrastructure and network effects of these established pools.
Precisely.
That's incredibly clever. But what does this mean for the average user?
Well, for starters, it could mean lower slippage.
Okay.
Meaning you get a better price when trading FXUSD.
Makes sense.
It could also lead to a smoother, more efficient trading experience overall.
Gotcha.
And because the FX protocol doesn't have to spend as much on incentivizing liquidity,
Right.
it could potentially pass those savings on to FXUSD holders in the form of higher yields.
So it's a win-win situation.
It certainly has the potential to be.
Lower costs, better user experience, and potentially higher returns.
Exactly.
This is already incredibly interesting. We've learned how FXUSD leverages the unique mechanics of the FX protocol to create a stablecoin that's inherently linked to ETH.
Right.
And it does this while tapping into existing liquidity pools, potentially offering users a smoother trading experience and higher yields.
Yeah.
But before we get too carried away,
Sure.
let's shift gears a bit and talk about the practical side of things.
It sounds good.
What can someone actually do with FXUSD?
That's a great question, and it's where things get really exciting. Initially, you'll be able to mint FXUSD using a few different assets.
Okay.
ETH, Stethfrax ETH, and USDC.
And just to clarify, if someone deposits something other than ETH or those specific liquid staking tokens, a swap happens behind the scenes to get them into the right pool.
That's right. The system is designed to make the minting process as seamless as possible.
Okay, great. So you can mint it. What else can you do with FXUSD once you have it?
Well, one obvious use case is simply holding it.
Okay.
For stable yield-bearing exposure to ETH staking. It's like having the best of both worlds.
Okay.
The stability of a dollar-pegged asset with the potential upside of ETH staking rewards.
That makes sense. It's like a one-stop shop for stablecoin gains and ETH exposure.
Exactly.
But are there other options?
Absolutely. You'll also be able to trade FXUSD for other stablecoins.
Okay.
Opening up a world of possibilities within the DeFi ecosystem.
And I know we've touched on this briefly, but you mentioned a potential pairing with PYUSD, PayPal's stablecoin.
Yeah.
This seems like it could be a huge deal.
It could be.
Can you tell us more about that?
Yes, this is one of the most exciting aspects of FXUSD.
Okay.
A pairing with PYUSD could create a direct bridge between the decentralized finance ecosystem and the massive PayPal network.
Wow.
Imagine seamlessly moving value between those two worlds.
It's like suddenly opening up a whole new avenue for mainstream adoption of DeFi. It's mind-boggling.
I know, right?
Are there any other integrations or partnerships on the horizon?
There are plans for integrations with lending protocols, which would unlock even more utility for FXUSD. And of course, we can expect more curve pools to pop up, further enhancing liquidity and trading options.
Makes sense.
But there's one more thing I wanted to share, something that's still in the works, but could be absolutely revolutionary.
Oh, I love a good sneak peek. What is it?
Imagine an AFXUSD vault.
Okay.
on FX Concentrator platform.
Right.
This vault would offer auto compounding, meaning your FXUSD yield is automatically reinvested to maximize your returns.
Gotcha.
But here's the cooker.
Okay.
They're also looking at integrating a clever leverage mechanism.
Okay.
Potentially up to 2x.
Wait, hold on. A leverage on a stablecoin? How does that even work?
It's a bit technical.
Okay.
But it essentially uses a non-liquidatable leverage mechanism to amplify your yield.
Okay.
Let's say you deposit $10,000 worth of FXUSD into this vault. With 2x leverage, it's like having $20,000 working for you.
Wow.
All while earning that sweet stablecoin yield.
So it's like supercharging your stablecoin returns,
Yes.
but without the risk of liquidation.
Exactly.
Okay, my head is spinning. Auto compounding leverage on a stablecoin and potential access to the PayPal ecosystem.
Yeah.
FXUSD is sounding less like a stablecoin and more like a financial Swiss Army knife.
I know, it's pretty wild.
But before we get carried away with all these possibilities,
Sure.
let's address the elephant in the room.
Okay.
Security.
Right.
With any new protocol, especially in the DeFi space,
Yeah.
security is always a major concern.
Absolutely.
What can you tell us about the safety and stability of FXUSD?
That's an excellent question, and it's one the FX team takes very seriously.
Okay, good.
First and foremost, FX has a strong track record of prioritizing security.
Okay.
Their code undergoes rigorous audits, and FXUSD is no exception.
Good.
Plus the fact that it's built upon the already battle-tested F model
Correct.
provides an added layer of confidence.
So it's not some experimental project built from scratch,
No.
but rather an evolution of an already proven system.
Exactly.
Okay, that's reassuring.
Now let's talk about the stability mechanisms.
Right.
You see, FXUSD utilizes a robust collateralization ratio. Similar to FEETH, it requires a minimum collateralization of 134%.
Okay.
This means that for every one FXUSD minted,
Right.
there's at least $1.34 worth of ETH or other approved assets backing it up,
Got it.
acting as a buffer against price fluctuations.
So it's like having a built-in safety net to ensure the peg remains strong.
Precisely.
Oh.
And in addition to the collateralization ratio, FXUSD also has a stability mode
Okay.
that kicks in if the collateralization level drops below that 134% threshold.
Gotcha.
This stability mode is designed to automatically restore the peg
Okay.
by adjusting various fees and incentives within the protocol.
So it's like a self-correcting mechanism that helps maintain stability even in turbulent market conditions.
Exactly.
Okay, cool.
And to top it all off, the FX protocol maintains a reserve to further bolster stability
Okay.
and protect against unexpected events.
Wow, they've really thought of everything.
They have.
A robust collateralization ratio, a stability mode, and a protocol reserve. It sounds like they're pulling out all the stops to ensure FXUSD is as secure and stable as possible.
They are.
Well, this has been incredibly enlightening.
I'm glad.
We've gone from a basic understanding of what FXUSD is to exploring its potential to reshape the DeFi landscape and maybe even finance as a whole.
It's exciting stuff.
I'm sensing there's still so much more to uncover.
Yeah, we've just scratched the surface.
But for now, I want to leave you with one final thought to ponder.
Okay.
As we wrap up part 1 of this deep dive.
All right.
What if FXUSD is just the beginning?
Ooh. I like where you're going with this.
What if this concept of splitting assets into stable and volatile components,
Yeah.
this idea of giving users the choice of how they want to interact with an asset, could be applied to more than just ETH?
Now that is a truly thought-provoking question.
We'll be back soon with part 2 of your deep dive into FXUSD, where we'll explore some even more intriguing possibilities.
Can't wait.
Until then, keep that brain buzzing.
Will do. Welcome back to your personalized deep dive.
Thanks for having me back.
You know, one thing I found particularly fascinating while reading through the material you sent over was how FXUSD leverages existing liquidity. Most new stablecoins have a tough time building those deep liquid markets that traders crave.
It's true. Trying to bootstrap liquidity can feel like throwing a party and hoping people just show up.
Right.
You need a critical mass to get that momentum going.
Exactly. But FXUSD cleverly sidesteps that issue by integrating directly with the massive liquidity pools that already exist on Curve Finance for those liquid staking derivatives we talked about.
Right.
So instead of starting from scratch, FXUSD taps into the pools that back popular tokens like STETH and FREXE.
It's like they're hitching a ride on a rocket ship that's already launched.
That's a great analogy. And remember, those pools are already battle-tested and incredibly deep.
Yeah, they are.
FXUSD benefits from much lower slippage
Okay.
and a smoother trading experience for users right out of the gate.
Which, as you said before, could lead to lower costs for the protocol itself.
Precisely.
It's a pretty brilliant strategy when you think about it.
It is. And there are other interesting implications, too.
Like what?
For example, the FX protocol doesn't need to go overboard with incentivizing liquidity providers through token emissions, like some other stablecoin projects do.
Right.
The liquidity is already there, ready and waiting. This means the team can focus on other things, like developing new features and expanding the FXUSD ecosystem.
It frees them up to be more innovative, which could ultimately lead to even more benefits for FXUSD holders.
Precisely. Speaking of benefits, I noticed you highlighted some sections in the articles about PYUSD.
Yeah.
You're clearly interested in how this potential pairing with PayPal's stablecoin could play out.
Definitely. It feels like a potential game changer. Connecting FXUSD with PYUSD could be a bridge between DeFi and the massive user base of PayPal.
I agree.
What are your thoughts on this?
I think it's a brilliant move.
Okay.
Imagine the possibilities. Seamless movement of value between those two worlds.
Yeah.
Access to new markets. Increased adoption of DeFi by mainstream users.
Right.
It's a compelling narrative.
It is, but let's not forget, we're still in the early stages here.
That's true.
There are a lot of ifs and unknowns.
For sure.
What are some of the challenges or potential roadblocks you see in terms of making this PayPal integration a reality?
That's a good point.
Yeah.
One challenge could be regulatory hurdles. Integrating with a traditional financial giant like PayPal could bring increased scrutiny from regulators, which could slow things down.
Okay, that makes sense.
Another potential roadblock is ensuring smooth interoperability between the two systems.
Right.
Bridging the gap between the decentralized world of DeFi and the more centralized world of PayPal will require careful planning and execution.
So while the potential is there, it's not going to happen overnight.
Right.
It will require navigating a complex landscape of technical and regulatory challenges.
Exactly. But that being said, the fact that FX is even exploring this integration speaks volumes about their ambition and the potential they see in FXUSD.
It's a sign that they're thinking big picture, not just about creating another stablecoin, but about building a bridge to a whole new financial ecosystem.
Absolutely. And that brings us to another crucial aspect that you seem curious about.
Okay.
Security.
Right.
You flagged several sections in the articles about the safety and stability mechanisms behind FXUSD.
Yeah, security is paramount in the world of DeFi.
Absolutely. Especially with something as innovative as FXUSD, it's natural to have questions about how it all works and what safeguards are in place.
You mentioned before that the FX team has a good track record when it comes to security.
You do.
And that FXUSD is built on the solid foundation of FETH.
Uh-huh.
But can you delve a little deeper into the specific security measures in place for FXUSD?
Of course, first and foremost, the code undergoes rigorous audits by reputable security firms.
Okay.
This ensures that there are no vulnerabilities or backdoors that could be exploited by malicious actors.
Makes sense.
And remember, FXUSD leverages the same battle-tested technology that underpins F,
Right.
a product that has already proven itself in the market.
So it's not like they're reinventing the wheel here.
No, not at all.
They're building upon a solid and secure foundation.
Exactly. Now let's talk about the stability mechanisms.
All right.
You see, FXUSD utilizes a robust collateralization ratio, similar to FETH, requiring a minimum of 134% collateralization at all times.
Okay.
This means that for every one FXUSD in circulation, there's at least $1.34 worth of ETH or other approved assets backing it up.
Gotcha.
This over-collateralization acts as a buffer protecting the peg, even if the price of ETH fluctuates.
It's like an extra layer of protection to ensure the stability of the peg.
It is.
It's good to know that even in turbulent market conditions, FXUSD holders have that extra peace of mind.
They do. And to further enhance stability, FXUSD has a built-in stability mode. If the collateralization level drops below that 134% threshold, this mode automatically kicks in,
Okay.
adjusting various fees and incentives within the protocol to restore the peg.
So it's like a self-correcting mechanism that helps keep things in balance.
Exactly.
It sounds like they've really thought of everything to minimize risk.
They have. And on top of all that, the FX protocol maintains a reserve that can be used to address any unforeseen stability issues.
Okay.
It's a multi-layered approach to security and stability that's designed to instill confidence in FXUSD holders.
It's impressive, to say the least. So we've covered a lot of ground here.
Yeah.
We've explored how FXUSD leverages existing liquidity for a smoother trading experience, talked about the exciting potential of a PYUSD pairing, and delved into the robust security measures that are designed to keep funds safe.
Right.
I have to say, the more we learn about FXUSD, the more intriguing it becomes.
It's a fascinating project.
But, you know, something keeps coming back to mind as we discuss this.
What's that?
I keep thinking about this concept of splitting an asset.
Yeah.
It's such a simple yet powerful idea. What if FXUSD is just the first step in a much larger evolution? What if this mechanism could be applied to other assets, not just ETH?
You're thinking about the broader implications of this technology. I like it.
Yeah.
It's a question that has crossed my mind as well.
Imagine taking an asset like gold, traditionally seen as a safe haven,
Right.
and applying the splitting mechanism.
Okay.
You could have FX Gold, a stablecoin, pegged to the value of gold,
Wow.
offering a digital store of value with minimal volatility.
Interesting.
On the flip side, you'd have X Gold capturing all the price swings for those looking to capitalize on gold's volatility.
That's a fascinating idea. It could potentially open up a whole new world of investment opportunities, allowing people to tailor their exposure to different assets in ways we haven't even imagined yet.
It's mind-blowing, really. What other assets could you see this working with?
Well, the possibilities are practically endless.
Yeah.
Imagine an FX S&P 500 tracking the overall market performance with the stability of a stablecoin. Perfect for long-term investors.
Or an FX real estate, allowing fractionalized ownership in real estate with the option to choose between stable or volatile exposure.
Right.
The applications are as diverse as the assets themselves.
It's like you're creating a whole new financial toolkit,
Yeah.
one that's customizable, adaptable, and accessible to a wider range of people. It's almost like financial Lego bricks.
I love that analogy. And it all stems from this innovative approach pioneered by FX with FXUSD. But before we get too carried away, let's take a quick pause and transition to part 3 of this deep dive, where we can continue exploring these possibilities and delve into what this could mean for you and your financial goals. We'll be right back. Welcome back to the deep dive. We've been exploring FXUSD and its potential.
It's been quite a journey.
It really has this new stablecoin and how it could shake things up in the world of finance. It's clear this isn't just another stablecoin.
Right.
The whole concept of splitting assets into their stable and volatile parts, it feels like something much bigger is brewing here.
I think you're right. This could be a blueprint for a whole new category of financial products.
Okay.
We've touched upon it briefly.
We have.
But let's dive a little deeper into what that could look like.
Okay, paint a picture for me.
All right.
What are some real-world examples of how this splitting mechanism could be applied to assets beyond ETH?
Well, we were just talking about gold. Imagine FX Gold D.
Okay.
A stable coin pegged to the price of gold?
Right.
It would be like having a digital version of gold, but without the volatility. Perfect for anyone looking for a stable digital store of value.
Yeah.
Especially during times of market uncertainty.
That's a really compelling use case.
Right.
So even if the price of gold fluctuates wildly, FX Gold D would remain steady.
Exactly. And on the flip side, you'd have X Gold,
Okay.
a token that captures all of gold's price movements. This would appeal to traders who want to speculate on the price of gold without having to physically own it.
So essentially, you're democratizing access to different aspects of an asset, giving people the ability to choose their level of risk and exposure. What other assets could you see this working with?
Real estate is another interesting one. Imagine FX Real Estate,
Okay.
a stablecoin backed by a portfolio of real estate properties.
Right.
This could open up fractionalized ownership in real estate to a wider audience, allowing people to invest in property without needing large sums of capital.
And of course, you'd also have the X Real Estate token for those who want to bet on the volatile swings of the real estate market. It's incredible to think about how many possibilities there are.
There are. We could see FX commodities,
Okay.
tracking the price of oil or other commodities, or even an FX S&P 500,
What?
a stable coin that mirrors the performance of the S&P 500 index, but without the daily ups and downs.
An FX S&P 500. That's incredible. You could essentially invest in the stock market with the stability of a stablecoin. It would be perfect for long-term investors who want to avoid the emotional roller coaster of market volatility.
Precisely. And it's not just about individual assets either. Imagine applying this mechanism to entire baskets of assets,
Yeah.
creating custom-tailored stablecoins that track specific sectors or investment strategies.
So, for example, you could have a stablecoin that represents a diversified portfolio of renewable energy companies, or one that tracks the growth of emerging markets.
The potential applications are limitless.
Wow.
It's about reimagining how we interact with traditional financial assets, giving people more control and flexibility in how they manage their investments.
This is really making me rethink my entire understanding of finance.
I know, it's pretty mind-blowing.
What was once a rigid system is becoming more fluid and adaptable. It's exciting to think about what the future holds.
It is exciting. And it's important to remember that this is just the beginning. As this technology develops, we can expect even more innovative applications to emerge.
So for our listener who's been following along with this deep dive, what's the takeaway message?
I think the key takeaway is this. FXUSD is more than just a stablecoin. It's a glimpse into a future where financial assets are more accessible, customizable, and tailored to individual needs.
It's about empowering people with the tools to take control of their financial future. It's about creating a financial system that is more inclusive and adaptable to the ever-changing world around us.
Couldn't have said it better myself. The future of finance is being written as we speak, and it's up to all of us to participate in shaping that future.
What an inspiring thought. So for our listener, if you're feeling inspired, if your mind is racing with possibilities, I encourage you to explore, further dive deeper into the FXX protocol, follow the experts, and see what other innovations emerge. The world of finance is changing rapidly, and you have the opportunity to be at the forefront of this exciting evolution.
Don't just observe, participate. The future is waiting to be built.
And on that note, we'll wrap up this deep dive into FXUSD. We've explored its unique mechanism, its potential yield opportunities, its robust security features, and even its potential to revolutionize finance as a whole.
It's been a fascinating journey, and I'm grateful to have had the opportunity to share my insights with you.
The pleasure was all ours. And to our listener, thank you for providing the spark for this deep dive. Your curiosity and thirst for knowledge is what fuels our passion for exploring these complex and exciting topics.
Until next time, keep exploring, keep learning, and keep diving deep.
That's a wrap.